Dan, welcome to the Personal Best podcast.
Thank you very much for having me. Excited to chat.
Yeah, it's honestly amazing to have you here. And we are talking about something today that I'm certainly no expert in. So I've got so many questions for you, as I'm sure the listeners have as well. But you shared online that your goal is delivering easy to understand mortgage advice to as many first-time buyers as possible. Why have you made that your mission?
Yeah, so being a young person in the UK at the moment, it's difficult. There's a lot of challenges and finances, and specifically for myself, buying a home, that's all part of it. So if that's, an area in which I can help in, then yeah, I'm going to try and do my best. I've got lots of experience working with first-time buyers, helping them to achieve success, and yeah, hopefully allowing people to lay some foundations and yeah, achieve that goal if they want to.
Definitely. It feels like such a minefield to navigate. And, I'm 24 now. Myself and my friends are thinking about potentially getting on the property ladder, but it also feels like it's a really hard thing to achieve. So I want to try and break that down for people today, just to get a bit more of understanding around the whole subject. But before we do that, how can someone decide if buying a house is right for them?
Yeah, so there's a huge debate that's ongoing, that's always been ongoing, and probably always will be, about buying versus renting. And there's no one size fits all answer. The answer is specific to the individual in that time in their life. There's pros and cons to both. For example, if you are buying, that could be you're going to build equity in a property. It's an investment for yourself and for your family in the future. There's security there. There's not a landlord who can kick you out after 12 months, as an example. However, to be balanced, there are upfront costs, deposit, solicitors, surveyors, and also if the boiler breaks, you're picking up that bill. On the flip side, with renting, there's no upfront costs necessarily. You may have, a higher degree of flexibility. If you do want to relocate in 12 months or 24 months, you might be able to do that. However, you're not building that equity, and the mortgage that you're paying is the landlord's.
Yes, there are so many pros and cons on either side of this, for sure. I interviewed a girl on my podcast recently who last year did a no buy year to save up a lot of money. So she didn't buy anything that wasn't a necessity. So she's done amazingly well and managed to save nearly 10k. But she said, having done that year, she's sort of in a existential crisis, thinking, well, I feel like now the next logical step is to put that towards a house deposit, getting to my late 20s. What would you advise her in that situation?
It's important to remember that the decision that you make right now isn't the decision for life.
Yeah.
That person may choose to rent for the next 2 years. Home ownership can still be there in 2 years, 5 years, 10 years potentially. So you don't need to rush into any decisions. If you've got your savings there, fantastic. You can sit on them if you do want to use them for house deposit. You don't need to necessarily do it today. So yeah, and if that person, maybe moving through their 20s and they've had a no spending year, that's absolutely great. Reality is that people maybe can't do that for 10 years. But yeah, that's great, and that's going to help you to move towards your goal. But if you do, if you're listening to this and you're thinking, well, I do want to still have a life, absolutely. You do need to still have fun, especially if you're a young person. Tick the boxes that you need to tick, whether that's traveling, seeing friends, etc. But you need to also be mindful of what the other goal is. In 5 years, do you want to buy a home? In 5 years, do you want to do something else?
Yeah. My mind is spinning with questions right now, and there's so many different topics that I want to go on to. But I completely agree that if you have those savings, then it's an option, but you don't necessarily need to act right now. But I also feel like there's a particular narrative in the UK, and maybe it's changing slightly with different generations, but it feels like the ultimate goal is to buy a property. The pinnacle of success in terms of having money is like buying a house, but it does still feel so far away for a lot of people. And I think it's a particularly British thing. I'm a huge fan of the show Sex and the City, which is set in New York. And there's one episode where the main character, Carrie, is talking about how no one buys in New York. Everyone just rents these expensive properties. Do you feel like it's a particularly British thing that we expect people to get on the housing ladder?
Absolutely. It's a massive cultural thing. I think as Brits, traditionally, we do value security and safety. Maybe this is changing a little bit now, slightly. However, but as Brits, we might go to the same holiday location every year, or our parents might go to the same restaurant at the end of the street every week. And yeah, I think it's the same with home ownership. We do value security, and there's nothing wrong with that. But yeah, I do absolutely think it's a cultural thing.
Yeah, and I think it is changing slightly with the generations. I feel like for my generation now, coming out of university, entering the job market, it still feels like we have so many different options available to us, whether we want to take a sabbatical and go traveling, whether we move in with friends and rent, or whether we do buy a property, or we move over to the other side of the world for a bit. Do you know what I mean? There's a less standard path now, I think, to even getting on the property ladder. But I think it's important to raise the issue that we are living in a difficult time for home ownership. I saw a piece of content that you made that said in the UK today, house prices are 9 times the average salary. In 2013, they were 6 times, and in 1983, they were 3 times. So, given that fact, do you still think it's realistic for young people to buy a home?
So it is realistic. Reason being, I'm in a job because people can achieve it. Okay, that's how we earn money. I work with home buyers every day. Is it difficult? Absolutely. Do you need to prepare, plan, work with experts? Yes, you do. Just to throw another set of figures out there, in 1997, in 88% of local areas in England and Wales, you could find properties for less than 5 times the average income. Okay, currently that's closer to 7%. What that means is that the vast majority of the UK is unaffordable for people buying homes by
I wonder
themselves.
what it is in London.
So, yeah, so I'm not sure what that figure is specifically in London.
Smaller, I would
but the
guess.
average house price in London is around about 14 times the average salary at the moment. But when you mentioned earlier about, people having more decisions to make now, more options, that's one of the reasons why the average age of a first-time buyer in the UK is 34 at the moment. Yes, one huge reason is because financially it's very difficult and only getting harder, but also the world's opening up with job opportunities, social media, more people are travelling. That's another contributing factor.
Definitely. I find it really interesting, actually, that a few people I went to school with have recently bought homes in the past couple of years. And it tends to be the people that didn't go to university and have stayed nearer and around the same hometown and have maybe been living with their parents, working a job, saving, and then getting a house. And I was quite shocked at that because I thought, how on earth have they been able to afford a property at, 22, 23 years old? Because for me, living in London, studying in London, it feels so far off. And then I've started to notice this trend on TikTok of people sharing how they've bought their first homes. And I find it so fascinating because actually you can pay a lot smaller deposit than I thought. And if you have, a 30, 40-year mortgage, you obviously are paying that off over a longer term. But for people that have no idea how to go about purchasing a property, can you just break down those key steps for people?
Absolutely. So let's imagine that somebody is quite a few years away at the moment, okay, and they're in the very early stages of beginning to lay those foundations. All right. It's never too early to speak to a mortgage advisor. Reason being, it's never too early to have just a very basic initial discussion about, in a few years' time, I would like to buy a property in this area for roughly this amount. You can then talk about your income, your level of debt, what your credit history looks like, and establish whether you're on track for that or not. If you are, fantastic, and that will give you peace of mind. If not, they may be able to let you know, actually, you need to increase your income, or actually, you need to decrease your debt. And that just gives you a little bit of clarity, even if you're years away, of what that path's going to look like moving forward. As well as that, you need to begin saving a deposit at some point. You will need a deposit to buy a home. Okay.
And what percentage of the property is a realistic deposit?
Okay, so I would advise a minimum of a 5% deposit.
Okay.
All right. You may see online that you can get a mortgage with a 0% deposit. That is the case. However, lending criteria is quite strict. Interest rates are quite high. You've got no equity in the property. If you can avoid it, avoid it. So yeah, a minimum of 5% of the purchase price. The way that that works is that with a small deposit, like 5%, you'll have a certain amount of interest rates available in mortgage products. When your deposit hits 10%, those products will improve. That happens again at 15%, 20%, and 25%, and so on. So the larger the deposit, the better the deal. It's not always completely linear.
So the less interest you're paying,
Correct.
the bigger the deposit.
And also the bigger the deposit, the smaller the loan. So naturally, your mortgage will be cheaper.
Yes, understood. Okay, so someone's spoken to a mortgage advisor like yourself. They've worked out whereabout they stand in terms of moving forwards, wanting to buy a property. Maybe they're on the path to saving for that deposit. If you've then got that deposit, where do you go from there?
Okay, so if you are, and is this person ready to buy?
Yes, they're ready and raring to go.
Okay, if they are ready to buy, then they would have another chat with a mortgage advisor, which at that point would be a lot more specific. Okay, it would be right now, I'm looking to buy a house for £350,000 in this area, and I've got this size deposit. Okay, if you want to begin the house hunt, to start getting out there, viewing properties, making offers, you need something called a decision in principle. What this is a document from the mortgage lender stating that we would consider lending to you a certain amount. That includes a credit check too. Now, if I was to give that to my home buyers, that would be accurate because this is what I do. Therefore, you would have peace of mind. Let's say I tell you can borrow £325,000. Okay, you can then, when you're lying in bed, scrolling on Rightmove, or when you're viewing properties, you'll have that clarity of, right, Dan's told me I can borrow this amount, therefore that property is or is not realistic. And then if you do want to view and make an offer, you're in a proceedable position, and yeah, you can hopefully make a successful offer.
But I find it quite interesting as well that in order to get a mortgage, obviously the banks have to do several different checks. And I know that Labour are trying to reduce some of the restrictions on home buyers in order for them to get a mortgage. So for someone to put themselves in a good position where the banks are likely to say, yes, you can borrow this amount of money, what sort of things do they need to optimise for? I know you mentioned debt and increase of income. Could you just explain that a bit further?
So to be completely honest, this is quite a difficult one because when they talk about loosening the regulation around mortgages, it sounds very nice. However, it isn't always realistic. So in the government in the past, they've had headlines, 1% deposit mortgages, we're going to try and do that, for example, things like that. However, lending criteria around mortgages, it's strict for a reason. It's strict to protect the banks, so they're not lending money to people who can't pay it back. But also it's strict to protect me and you when we're taking out the debt. You want to avoid financial distress, and loosening the regulations around mortgages, so whether that's letting people borrow more money, letting people put down no deposit, it all sounds great. However, there are some risks with that, and it's not always the ideal solution in my opinion.
Okay, understood. On that topic of, saving money and trying to get into a good place in order to purchase a property, how can financial habits and smart money habits play a part in achieving home ownership?
Absolutely. So let's talk about credit scoring as an example. So that's a big one when it comes to financial habits and money habits. I always say to people that my most important credit scoring advice is just not to make a mess of it in the first place. Mm-hmm. From being 18 years old, you will suddenly have a credit report that's available to you. Okay. I see credit reports every day. I've seen hundreds of credit reports. I've probably seen thousands of credit reports. And around about 50% of my home buyers have some form of bad credit. That could be as little as one missed payment on a phone bill in the last 6 years. And of those with bad credit, around about half of those don't really understand their bad credit. Now, people can have bad credit due to abusive relationships, job loss, bad breakups. But reality is that most people have bad credit just due to bad habits, a lack of care, a lack of awareness, maybe being 18, 19 years old, taking out a credit card, not really worrying too much about whether or not you do need to pay that back on time, maybe missing your utility bill for a month. and not really understanding that that's going to show up on your report for the next 6 years. So yeah, one thing people need to do in an ideal world is everybody from being 18 years old will have an awareness of their credit history. And it doesn't have to be a master plan. It doesn't have to be fancy. It isn't complex. It's simply making your regular payments on time, making sure your debt at most is proportionate to your income, and making sure that your credit utilization isn't too high. If you're ticking those basic boxes, you're going to have a good standing when it comes to buying a house or achieving other financial goals.
I saw a video on TikTok of a young girl who explained that she got herself into thousands of debt because she didn't realize that credit cards weren't just free money. So she took out multiple credit cards. I'm not sure how she managed to bypass the, terms and conditions and everything, but she'd racked up a lot of debt just thinking this is money from the bank that they are giving me. And so it's so easy to obviously make a mess of it, like you say. But you also mentioned earlier that it's important to think about saving for a house deposit if your goal is to buy a property. So what saving tips could you give people as well?
Yeah, so if I was looking to save my first house deposit today, there's a few things I would do, okay? I would speak to a mortgage advisor to establish how much of a deposit you're going to need. Therefore, you'll have a figure in mind, and if you're looking to buy a home in 4 years' time, divide that figure by 48 months, and then you've got a saving target. You can then automate that by making regular contributions into a savings account. Okay. Second one, lifetime ISA. Okay. If a lifetime ISA is suitable for you, then I would look to use a lifetime ISA. A lifetime ISA allows you to contribute £4,000 annually, and the government will make a 25% bonus payment on top of that. So for every £4,000 you pay, they'll give you £1,000. Okay, it's essentially free money. However, I said if suitable, and there's a reason for that. Okay, so a lifetime ISA can be used only. You can only benefit from a lifetime ISA 12 months after you've made your first payment into the account. So if you're looking to buy a home in the next 12 months, it's not for you. As well as that, the maximum purchase price to benefit from a lifetime ISA is currently £450,000. Now, as mentioned earlier, the average age of a first-time buyer in the UK is 34. 34 is quite a typical age for starting families or having families, and let's say you're in London. If you're 34 as a first-time buyer looking to buy a family home, you're probably not going to get a family home for £450,000 in most areas of London. Okay, so if you're going to be buying a property for more than that, then again, a lifetime ISA isn't for you.
And am I right in thinking that money has to be spent on a house?
For a suitable property or for retirement.
Okay.
If you withdraw the money for any other reason, then you will have a withdrawal penalty.
Really big, lavish holiday.
Yes, so with a withdrawal penalty. So I actually saw an example of this earlier today, but I'll simplify sort of the maths. So if you contribute £4,000 and the government give you £1,000, there's a 25% withdrawal penalty on the total, including the bonus. Therefore, meaning you'll end up with less money than what you put in.
Okay.
Now, an issue with this is that people may be saving a deposit for 5, 6, 7 years for a property that was originally £425,000. Now, 5, 6, 7 years later, that property's £475,000. Therefore, meaning they can't use the money in the lifetime ISA to buy that property unless they withdraw it and end up with less than what they put in. So it's a little bit of an issue. There's a lot of discussion at the moment about whether or not that will increase, but at the moment, it hasn't.
Okay. I'm really trying to process everything you're saying because this is all such new information for me, but you're explaining it very clearly. We're on the same page.
One further thing for saving a deposit is that, and it's a bit of an awkward one, is establishing with your parents whether or not you're going to be gifted any money. Now, reason being, that's not from an expectation standpoint, but reality is 36% of UK first-time buyers are gifted deposit money. So if you can establish whether or not you will be, you can then factor that money in to your savings target, and that's going to help you to achieve what is quite a challenging goal. So you know how much money you've got, how much more you need to save, and that's going to help. Unfortunately, it won't be everybody.
Yeah. Obviously, people are in such different financial situations in that case. But one thing I really want to dig into a little bit is getting this balance between saving, if we're talking about saving for a house or just long-term savings, and enjoying life, and spending money to do fun things and to do the things that you enjoy. And you were just talking there about lifetime ISAs, and I get a lot of my information from TikTok, but I watched a video of a girl who had her savings in a lifetime ISA, with the goal to buy a house. And a friend of hers asked if she wanted to go traveling and go on this big trip, and she said no, because all of her savings were in this account that she couldn't access. And that friend then died. So obviously, in hindsight, it feels like the right decision would have been to use some of that money to go traveling. And I think in the video she explained she was going to go and do that. Obviously the friend had passed away, but I think it's a good message that life is short, and it's to be lived fully. But it feels like sometimes you have to sacrifice some of that if you're squirreling money away into these saving accounts. I'm assuming this is something that you've thought about and you talk about with clients, and I just wondered what your mindset is around that.
Yeah, so reality is, if you are looking to buy a house and save a deposit, there will be an element of sacrifice. There has to be. But it's a conversation maybe to have with yourself about where your priorities sit. So, and there's no right or wrong answer, but is the priority to buy a home? Is the priority to maybe go travelling? Or is it, can you balance the two and do a little bit of both with an awareness of, if you are going to spend more money travelling, there's less of a home deposit there. But that's okay if that's what your goal is and if that's what you want to do. You need to have a life. You need to live a life. I often will be, my home buyers will contact me and say, Dan, I've been on a big holiday this month. I've spent a lot more money this month. Will the banks be okay with it? Yeah, you're allowed to have a life and get a mortgage, believe it or not. As long as you're not showing any signs of financial distress, such as missed payments, overdraft use, high credit utilisation, the banks are fine. I always say, as long as there's no negative financial signs there, you can essentially spend as much money as you want on takeaways. That's okay. You're allowed to have a life.
Yeah. Honestly, I think if the banks were really to scrutinise my statements and see how much I spent on coffee, it would be quite concerning. But I think you're absolutely right that it's important for people to think about what their priorities are. And I had a really great discussion with Anna Brading on the podcast, who's a financial educator and an author. And we discussed how you need to think about your values and what matters to you when it comes to spending money, because it's very easy, I think, to be swept along with a lot of the marketing and advertising that we see from these big businesses saying you need to spend your money on this car and this holiday and this new iPhone. Whereas actually all of that might not matter to you. But if spending quality time with your family is important, then that is something that you would spend the money to do. And I think that ties into bigger goals of whether you buy a house or whether you go traveling. And so I really appreciate that. And, even though your job is to advise people on mortgages, it seems like you have a very balanced view of whether it's the right decision for somebody or not.
Of course, it's not my job to sell home ownership to anybody. It's if you've decided that it's something you're interested in and that's a goal of yours, it's my job to then help you achieve that. It isn't going to be for everybody, and that's absolutely fine.
Yeah, definitely. So with your work then, what do you think is the biggest hurdle that stops people from buying their first home?
I would say it is property prices. I would say it is the fact that property prices are so high. It just makes it's so hard, compared to maybe when our parents bought properties. It's a completely different landscape for people. It is, it's something that can take years of planning, years of saving, years of building an income that's suitable. Yeah, I think that is a major factor.
Yeah. And do you see that landscape changing at all? I know Labour have pledged to build over 1 million new homes during their turn in Parliament. Do you think that will help?
To be honest, not really. But I'll tell you why. It's all very complex, and there's so many moving parts that maybe aren't moving in the right direction. Historically, house prices have always increased ahead of wages over the long term.
Yeah.
That is going to continue. Maybe we can slow that down a little bit by building more properties, but it's not, house prices are not suddenly going to come down to 4.5 times the average wage. That's just not going to happen. So that is why, if you are looking to buy over the next few years, it may be easier than it might be in 10 or 15 years' time. But reality is, you can't rush into making a decision like that.
Yeah, yeah. And I guess there's an element of accepting that it's difficult and it's hard. And I think it's frustrating when, people talk to their grandparents and how they managed to get on the property ladder at, 20 years old, whereas the landscape is so different for people now who are trying to also buy their first property. We haven't touched on much the difference between renting and buying your first home. And I don't know if you're familiar with Simon Squibb.
I am.
Yes. So I was watching a podcast with him recently, and he said that property is a scam and that we shouldn't talk about rent versus mortgage, but it's mortgage versus freedom. And the way he explained it is that obviously if you rent a property, it's normally a shorter term contract. It allows you to then up and move wherever you want in the world. Also, if you are renting a property and your dishwasher breaks through no fault of your own, the landlord will replace it. If your fence blows down, the landlord will hopefully replace that as well. Another thing he mentioned is that most people don't end up paying off their mortgages. And if they do, they then own the property at, 65, 70 years old, which doesn't always sound that appealing. I wonder what you think of that opinion and whether you agree with him at all.
Okay, so I am aware of Simon Squibb. I like a lot of Simon's content. But yeah, I've seen the exact same clip that you have. Okay. Absolutely, as mentioned, there are some positives to renting, and that is going to be more suitable for some people. But the clip and the point made as a whole, in some areas, utter rubbish. But I'll tell you why. Not everybody here, their primary goal is purely to maximise investments. Okay, reality is, as we've touched on in the UK, a lot of people do want that security of owning a home. People do want to build equity. A lot of people do pay off their mortgage and be mortgage free at the end of it, and therefore have a financial asset that's there for the children. Yes, is it possible to invest elsewhere? Of course it is. Okay. However, reality is that most people in the UK value home ownership and want that security, not only for them, but also for the family. Buying a residential property isn't solely an investment, okay? It's also a safe space for your children. It's a roof over your head. It's a place to grow a family and play in the back garden with your children, okay? It's more than just an investment. It isn't as black and white as just one versus the other in terms of what figures you could generate.
Yes, exactly. I understand that completely. And also, I think when it comes to renting, you picture it in an ideal scenario where you find your perfect property, you have a lovely landlord who comes around and fixes everything on time and is super accommodating and understandable. But unfortunately, there are a lot of shady landlords out there. I know that they've recently changed some of the regulations to stop landlords from charging people 6, even 9, 12 months rent up front, which I do believe is quite a positive move, because you end up with this de facto renting war where it's just so competitive and people can't end up even getting a rental property. And so I don't think renting is all positives and buying a house is all negatives. There is so much nuance in between.
That's absolutely the case, yeah. So you need to have a balanced view of things, but people do need to watch out for the clips that they see online and the clickbait that they see online. As mentioned, Simon's great, but he also tells people to quit the job on the spot and he'll give them 500 quid.
Yeah, yeah. I agree with that, because I'm all for encouraging people to go out and achieve their dreams and pursue something that they're really passionate about. I mean, this podcast was born out of a passion to create something and hopefully help people through interesting conversations. But I'm also not delusional in thinking that it will be an overnight success and I should just quit my job. I'm working a full-time job as well. And so I think it is important that we encourage people to, go out there and do the thing, but also be realistic at the same time.
I completely agree.
But I think this ties into the fact that there is a lack of education around buying property. And as we've already touched on, how do you get a mortgage? How do you save for a deposit? Obviously, it's become your job to help people buy their first home. Do you almost feel a frustration that there's not more education out there?
There's a lack of financial education in all areas. We're not really taught any useful financial information throughout school, are we? Now, the landscape may be changing in terms of there's a lot of financial information on TikTok, on different parts of social media. However, I do also believe that our generation, or generations maybe even younger than us, are a little bit more skeptical about the information that they are consuming. So, we question things a little bit more. We sort of may be aware that the information on the news may be leaning one way or the other, that the information on TikTok, some of it might be wrong, or Stephen Bartlett at the moment's being under fire due to misinformation on his podcast. So that's why it's important to speak to an expert, because through school and through our early adult life, we're not getting the education that we need financially. Whether that is, I speak a lot about young men from working class backgrounds because that's where I'm from. They're not taught about credit scoring, controlling your gambling, not taking out loads of debt when the letters are coming through your door constantly, the financial pressures that come with being a young person, or potentially come with being a man in my case. There's absolutely a lack of financial education.
Yeah, definitely. And I think things are changing for the better, but it still feels like, Martin Lewis is the fount of all knowledge when it comes to finances. And anytime things change in terms of the government, he's like the voice of reason, and he's great. Obviously, he's an expert in that field, but we definitely need to broaden the education that we're giving to people. And you mentioned TikTok there. I think that platform has actually been really great for encouraging people to be better with finances. I don't know if I've just ended up on that slight echo chamber, but social media can often push overconsumption, and it does feel like there's a certain pressure to buy the latest designer clothes and almost live beyond your means to reach this unattainable standard. Whereas I've seen a lot of content recently about people sharing how they're trying to clear their debt, how they are trying to save for their first house, their like top 5 saving tips. And I think that's really useful to people because, first of all, it reminds you that you're not alone if you don't have loads of money to spend on all these expensive things. And also it's practical advice that I think can really help.
Absolutely. I think finance is becoming a little bit fashionable, which is a good thing. It's just a shame that this has maybe happened because finances have become so difficult due to the cost of living crisis, due to house prices. But at least we are having conversations now. As a mortgage advisor, my job can be sort of quite traditional, and a lot of the older heads in the industry maybe don't like what people may refer to as financial influencers. Maybe there's a lack of qualifications there or whatever it might be. I personally interact a lot with that community. Reason being, I think it's important to start the conversation. And I think TikTok and Instagram and YouTube, it is starting the conversation. People are talking about finances. It's becoming a little bit more normal to talk about what your income is. What is your salary? Do you have debt? Do you have any bad credit? I grew up in a household where I would never be able to ask my parents how much money they earned. That's not a conversation you would have. Hopefully, though, that might be changing due to such platforms.
Yeah, and I think it's a really positive change. I mean, you mentioned there that there is a certain pressure on young people, particularly men, to achieve a certain level of wealth. Have you experienced that firsthand, or is it something that you've sort of just noticed?
So I'm from the Northeast. I'm from a very typical average working class background, pretty normal stuff. I would say, everybody in my area knows another lad who maybe has a lot of debt and it's a real problem, or is a gambling addict. It's a very normal thing to know young men with such problems, and that in itself is a real problem. And what I tend to see is that people are making these problems very young. The problem becomes such a big deal, and then all of a sudden it seems like it might be too late for them, and then it's quite a difficult road back.
And also I feel like that takes such a toll on you mentally. I, started this podcast with the aim to help people live healthier, happier lives and feel like the best version of themselves. But if you're, sinking in debt and you don't really know how to get out of it, or you just really struggling with your finances, you're obviously not going to feel like the best version of yourself.
Mm-hmm.
And I wondered if someone, does find themselves in that position. Obviously, buying a house for them might feel like a really, really far away goal. But what advice would you give to someone that maybe feels a bit discouraged?
It's absolutely speaking with experts, having a conversation, and just finding out what it is you can achieve, whether it's a mortgage advisor or a financial advisor. A lot of the time, those initial conversations are free.
I found that out recently. People do that to help you get out of debt. You can have free consultations.
Absolutely, that's very normal. And with financial stresses, I think if you ask most people what the biggest stresses were in their family home growing up, typically it would be finances.
Yes.
And I think everybody's circumstances are different. For example, somebody may have parents. A big advantage that you can have as an adult, whether we like it or not, is our parents financially. If you've got parents who can maybe buy your car when you're 17, that's going to open up job opportunities. Who can give you a deposit, that's going to help you to get on the housing ladder. But it's not just finances, it's parents who are also wealthy in time and in health.
Education.
So as an example of that, if you've got children, okay, and your children have 4 grandparents who are all retired, who are all in good health, you're probably not going to have to pay for nursery at an early age. If you don't have that, you could be paying £1,000 a month for nursery, which again is causing financial difficulty. So everybody's circumstances are different, and you aren't at fault for your circumstances if you do start from a difficult position, but you can still have an awareness that it is your responsibility to then move forward from that in a positive manner.
Yeah, that's really something I live by, and it's a quote that I first heard from Mark Manson, that something might not be your fault, but it is your responsibility to deal with. I mean, even personally speaking, I feel so privileged in many ways with my, upbringing, where I came from. I was raised by the most amazing parents, but I never lucked out with, grandparents. My dad's not around anymore. There's people who are in way more privileged positions than I am. So I think it's about where you are currently and, looking at your own position and how that aligns with your goals moving forward. But you also just touched on how, lack of money is a huge stress for people. And something I heard about recently is that the thing that's missing in your life is the same thing you think will make you happy. So if what you're missing is enough money, you put a lot of your future happiness on making money. And something that also highlighted it for me was watching a recent interview with Billie Eilish. And she said how her goal was to just make real friends. And you think, oh my gosh, she's this incredible pop star. She's got the fame, she's got the status, she's got the money. But what she's missing is friends. And for her, that's the thing that she thinks will make her happy. And so I think on that point, it's important to not just focus on what you're lacking and actually focus on the things that you do have. And if money is something that you're struggling with, lean on your friends and family that you have around you, or as we say, these free pieces of advice out there, the content you can consume online. Like, what are the things you can do to move forward in your situation?
Absolutely. One of the, say, what do you like about yourself? Something I've always sort of liked about myself is that I've always been very clear and had an awareness about what's important to me in my life. So before we started the podcast, you asked me, would I ever move down to London? In my line of work, and I want to do podcasts and things like this, if I did move down to London, opportunities would, there would be more opportunities, let's put it that way, and I could increase my income. But for me, my family and my friends, and I've got a great base up there, are all based in the Northeast. So that's a decision that I've had to make. I'm not going to earn as much money in the Northeast because I'm not going to get as much opportunity. However, for me in my life, that's the right decision. And I think you need to avoid comparison and just think about what's important to you, where can you best find that balance, and try and find some peace from there.
I love that, because I think it's so easy to get swept away by other people's goals and dreams and think, oh, because they're doing that and they're successful, maybe I should as well. But that might not be the right decision for you, and what's important to each individual is so different. Do you have a house in the Northeast?
I do. So yeah, I have a property in the Northeast, which I live in with my partner, 2 kids. Yeah, I like our little house.
I
Yeah.
love that. I realised I didn't even ask, but that makes so much sense. So on that, what are some of your future goals in terms of your career? Obviously, you're out here doing podcasts, you're creating content. Is that something you want to put more time into?
Yeah, absolutely. So I love sitting down and having conversations with people like yourself. Last year, the majority of my home buyers actually contacted me after listening to a podcast.
Mm.
You know, I've made a conscious decision to step away from the man and the grey man in the grey suit as a mortgage advisor. I try and present as myself because I think people want to work. You know, I think now relationships are so important. I think people want to work with people who they like, who they trust, and I might not be for everybody, but I am for some people. So yeah, in terms of, so I'd like to, help more people get out there, get more exposure. I'd like to build a community for people who are looking to buy their first home. I do plan on starting a podcast so more people can hear more conversations, not only around finance and mortgages, but also how to landscape your new build garden, how to manage your relationship when you buy your first home.
Yeah.
All of those sorts of things. But earlier on, you touched on success and what success is. And I always think sometimes, a friend might say to me, he's really successful. And I'll think, how do you know? And they'll say, because he's got loads of money and he's got a good car. But how do you know that? So is he happy when he goes home at night? He might be, he might not be. I think the definition of success is as simple as being happy.
Yeah.
Or being content, at least. And everybody's sort of happiness pie is made up of different ingredients. Some people may need sort of more career in there. Some people may need more family, friends, relationships, experience, travel. I think that's different for everybody. But I think if you're content most of the time, I think that is what success is ultimately.
Definitely. That's a perfect definition, and I completely agree. And it really ties into what this podcast is all about, that it's your personal best, it's personal to you, and what might mean success for someone else isn't necessarily the same for yourself. And I think if we can all arrive at a point where we feel pretty content with our lot, then you can't really ask for much more. The last question I want to ask you, although I feel like that was a great answer, is if you had to give one piece of advice to help people achieve their personal best, what would it be?
So if we are keeping it within sort of finances or home ownership, it would be that when you are a young person moving through your late teens or your early 20s, your priorities are going to be different at different stages. Home ownership isn't always going to be a priority for you. At some points, it is going to be traveling, going on a night out, eating expensive food, relocating, whatever it might be, and that's fine. But as long as you have an awareness that at some point you might want to buy a home, and therefore you look after things such as your finances, your credit scoring, and you tick those very basic boxes, then yeah, when the time comes, hopefully you will be able to achieve your personal best.
Dan, thank you so much. You've turned what is a very complex, confusing topic into something that's very easy to understand. And I now feel like it is more attainable, and maybe it's not this huge, overwhelming thing that I thought it once was. So thank you so much. If people do want to find you online, check out what you're doing, where can they go?
Yeah, so it is attainable because I help people do it every day. My main page is my Instagram page, which is at Dan Does Mortgages. I'm also on LinkedIn as Dan Knott, and also on Facebook as Dan Does Mortgages. On my Instagram page, there's daily tips, tricks, bits of information. There's stories about clients who I'm helping at the moment. And yeah, I'm always available to help.
Thank you so much.
Thank you.
Thank you, everybody, for listening.